Hey, everybody. I just wanted to remind you before we get going on the radio today that I still have the link to my webinar that I did last weekend up on my website. All you have to do is go to statlerfinancial.com under the events tab and click on the link there to watch our webinar regarding the elections. Even though the election's over and undecided, there's a lot of information there that would be beneficial for you. Take a look. That's statlerfinancial.com under the events tab, the webinar on Decision 2020.
Good morning, everybody. Hey, welcome to Thursday, November 5th. Guess what? We still don't know who the president's going to be starting in 2021. But the markets are incredibly moving forward. And so why? That's the big question. And we'll talk about that next. Hey, we've talked a lot about volatility. We're seeing it swing to the upside now. That's not the only concern we need to have. You know, we right now are in the lowest tax brackets that we will probably ever see in our lifetime. Are you wasting a tax bracket? Should you be doing Roth conversions? Should you be doing something different with your retirement money? Give us a call. And let's run through some scenarios to see if you're utilizing your tax brackets to the best you can. Call me at 863-382-0037 or go to my website, statlerfinancial.com. And there's a button there you can click to my calendar and schedule your own appointment. Hey, I look forward to talking to you soon. Dave's next.
In Timberlake, morning, Dave. It's 8:40, 20 here before 9. Let's find out what's going on Wall Street this morning, as things are, well, bluntly put, kind of weirding off up there at the moment. Must have something to do with politics, huh? Let's check in with the authority on all of this, Statler Financial Services' very own Phillip Statler, who really kind of shapes what I call him an authority on all of this, because sometimes both of us are shrugging our shoulders wondering what's going on. Good morning, Phillip. How are you?
Hey, good morning, Dad. Doing well today, preparing for a day of education with the IRA expert of the nation, Ed Slott. So that starts today and carries through tomorrow. So obviously we can't get on a plane and go, so we are doing it virtually again. So that'll be a lot of good information coming our way today.
And it actually makes you a more valuable advisor to folks planning their retirement, because you're right up to the second when you work these seminars, right?
Absolutely. You know, we get good current information a couple times a year from Ed, as well as just updates on an almost weekly basis.
That really is a valuable thing to have in your financial advisor, and I'm glad you're doing it. And while I wish you were able to climb on a plane when you want to, I'm glad that you're stuck at home keeping me company, because, boy, the market is weirding off. I can't come up with a better term for it. We're sitting there looking at an election where the two candidates are throwing rocks at each other 2 days after the election. And the Dow Jones Industrial Average was up 367 points yesterday. You'd almost think we had a stimulus package through or something. Investors evidently are kind of looking at the way that we are. There's a good chance of absolutely nothing going on in Washington, right?
Well, that definitely seems to be the case, Dave. I mean, when I saw the markets yesterday, 2 days, 3 days in a row, I really started kind of digging through articles to see, okay, what are people thinking? And that's exactly what they're thinking, is that it's going to be gridlock in Washington, because the Senate looks like it'll still be Republican. The House will be Democratic. And so, you know, everything does have to come through the Senate to get to the president. So, you know, they're basically saying it's going to be gridlock, and Wall Street's liking that gridlock right now.
Understood. One of the conventional wisdom pieces that I read, too, basically says that assuming at this point, and it looks like it's going to happen that way, assuming Biden makes it through, and right now the numbers tend to indicate it's likely, having a Republican Senate kind of forces the old Biden to come out, the deal maker who works across the aisles like he used to in the 1990s when he was a senator. And it may very well mean that we'll have a very, very moderate regime under a Biden administration. And that's something as well that Wall Street likes, because they don't like radical changes. They like predictability. Hence, gridlock is not necessarily a bad thing for the indexes.
Oh, that's right. And we'll continue to see how that plays out. But, you know, you and I are both very surprised at what we're seeing in the bounce back of all the indexes on the stock exchanges. So it's kind of interesting to watch as we continue to see big numbers coming across the indexes.
Yeah, especially on the NASDAQ. The NASDAQ exchange was up 3.85% yesterday again, another one over 3%. And when we get to the futures this morning, it doesn't look like it's pausing all that much. And that's against the face of the economic news we start the morning out with. It's Thursday, so we get first-time unemployment claims. They were down from last week. That's good news. They were not down as far as the market expected them to be. 751,000 new unemployment claims this past week, an improvement over the week before, but the market expected better, didn't they?
Yeah, they did. They did expect, I don't know, 20, 30,000 more jobs to be created. So, you know, that's just the way it is in the world we look at right now. So we continue to look at the unemployment numbers. Obviously, they're getting better, though, Dave. They're getting much better from what they were in the heart of the COVID-19 crisis. But I'm a little leery just because what I'm seeing now in Europe and England and, I mean, Greece is basically about to go under another lockdown. It looks to me like Britain, the UK is fixing to go under another lockdown. And so that's concerning because that's people staying at home going to have to start drawing unemployment if that happens here in the United States.
Yeah, absolutely. A big trading partner of ours, it's a little like we say when China has less than expected growth rates. They may be a rival of ours, but they're also a trading partner. So bad news in China is not necessarily good news. Is not necessarily good news here. Same thing happens with Europe. This is a friendly rival and a partner. And if Europe hits the skids economically, that does have an impact on us, even if we're doing everything right.
Yeah, I think so. And I think now I think the UK is probably getting a little bit of a bump this morning in their exchanges because I saw that they did put out another stimulus package and it was like 50 million pounds or 50 billion pounds more than expected. And so that was an unexpected move by them to send more money and more stimulus out to their people.
Plus, you add on the fact that our markets are going crazy, and they do tend to get symbiotic as well on that. So our good news is also their good news, just like their bad news could be bad for us. By the way, the continuing claims just came across my ticker. Continuing jobless claims dropped by a little over 500,000 last week. So that kind of counts in as good news. I don't know what the expectation was, but that's an improvement anyway.
Yeah, and that's one of those numbers that you and I keep a watch on because that actually kind of becomes a little bit more important than just first-time claims.
Absolutely. Hey, we're still in earnings season, and we're still getting a lot of household names reporting. Are they supporting an increase in the indexes today, or are they going to be a drag on it? What do we see coming out of the companies themselves? Most
of them are helping the indexes this morning. We have General Motors reported, and they beat by about $1.50, almost $1.50 a share on earnings. Yeah, they're trying to give Ford a run for the money when it comes to trucks, and so they had a strong demand for their trucks and SUVs. Revenue was basically in line with what was forecasted, and so this morning they are up 6.3% before we get started this morning.
They're darn close to the top of my big winner list. I assume that had to be good news this morning.
Absolutely. Then we had Cigna, the big insurance company. They came in at 17 cents a share, which that's above their estimates. That was good. Revenue was above estimates also. They've seen higher sales in their health insurance unit. They're trading up 1.1% this morning. Not a big increase, but hey, they were up 14.5% yesterday.
Wow.
Yeah, big move yesterday.
And green ink today, too, is good news.
That's right. Yeah, absolutely. Then we have one of the pharmaceuticals, Regeneron. They came in, they beat by about $1.30 a share. Revenue also came in above forecast. They're seeing some improvements in two of their drugs, one for an eye treatment and another for eczema. So some good things there for Regeneron. They're up 2.25% yesterday. today after being up 5 yesterday. So we're seeing some crazy numbers from yesterday's close to today. We had Capri Holdings. Now that doesn't sound, I know that doesn't ring a bell for you, but that's Michael Kors.
Okay. I was going to say it doesn't ring a bell. You're absolutely right.
Luxury brand, Michael Kors, and they reported 90 cents a share earnings. And look, they were only expected to earn 4 cents a share. So that's pretty significant beat for them. Revenue beat forecast also. They're seeing a lot of strong demand, get this, in China. And obviously a surge in their online sales also helping them big time. They should be one of your big winners today too, Dave. They're up almost 10% this morning.
Wow. I don't have them on my list, but I've never figured out for sure how my tip sheet chooses what to tell me about either.
I know. It's hard to figure that out. And it seems like we got several clothing lines. We have Canadian Goose, the outerwear manufacturer, came out, and they earned 10 cents a share compared to they were expected to lose 3 cents a share, so 13 cents better than expected for that company. Now we don't have a stock price on them, Dave, because they're actually traded on the Toronto Exchange, and so we don't get any precursors for that one.
I didn't ask you ahead of time, but did Hanes report?
Hanes did report.
I was wondering, something's happening to them, and I cannot believe, unless nobody wears underwear during a pandemic, as to what could have happened to Hanes.
Well, they beat by 3 cents a share, came in at 42 cents, and their revenue exceeded forecast too. I don't see anything negative. They jumped about 14% pre-market. Let me see. I didn't have them pulled up. Let me see where they are right this minute.
I'm showing Hanes Brands down by 13% pre-market here.
Yeah, I got them down 11.4% right now. There is no indication of why.
That's what the world goes commando during a pandemic or something, because they sure didn't sell enough underwear to keep somebody happy.
Well, and here's the deal. My tip sheet says that their shares jumped 14% in pre-market trading, and now they're down 11.5. That's a 25% swing if that's correct.
Yeah.
Not a good sign for them. I'm not sure about that one. So maybe there's some misprints there.
Absolutely. Got time for one more. What have you got?
So let's look at Expedia. Expedia, that's a household name. They lost 22 cents a share, but that was a lot better than expected. They were expected to lose like 79 cents a share. So that was ahead of expectations. Revenue came in above expectations. They're seeing a little bit more demand for travel, which is a good sign for a travel company. They're trading up this morning about 4% before we get going.
We'll take that happily. Resetting the table this morning, yesterday, big up day. Dow was up by 1.33%. NASDAQ up by the better part of 4%, all in one day. And the Standard & Poor's was up over 2% as well. Can we keep that momentum going, Phillip? How we doing 45 minutes early?
They are definitely heading in the right direction. We've got the Dow up 1.4%. We got the S&P 500 up 1.8%, and we got the NASDAQ up 2.6%. On the commodity side, we got silver making a huge jump, up 4.5%, and gold up 1.9%. Crude oil is trailing down just a little bit, 1/3% to 39.03 a barrel. Dave, as we look, and I'm sitting in tax classes today learning about IRA conversions, that type of stuff, you and I are still seeing the lowest tax brackets we're ever going to see. And I was sitting down with some folks the other day, and they weren't using all of their tax brackets. They should have been taking more money out of their IRA so that they weren't wasting tax brackets. And if folks don't know if they're wasting tax brackets, they really need to give us a call, because that's important right now.
I agree. What is the phone number to get a hold of you and get an appointment?
Just call 863-382-0037, or they can go on our website, statlerfinancial.com, and I got a button right there they can click and schedule a time to come visit with us.
Well, all righty. And don't forget the Statler Financial Radio Show every single weekend, 3 times, 6 noon on Saturday, and again 10 o'clock Sunday morning on News Talk 7:30 a.m. I appreciate it, Phillip. You have a good day.
Buddy.
Learn a lot. Catch you tomorrow, all right?
All right. Thanks, man.
Thanks much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Let me just remind you again that, that we have a webinar that we did last weekend. It's still got some great information. None of it's really changed based on what's happening in the election today. So if you get a chance, go to the website, statlerfinancial.com, under the events tab, and you can click on and watch that webinar there. A lot of good information there. I appreciate it. Have a great day. I look forward to seeing you again tomorrow.